At the helm of sustainability strategy for one of the world's most influential financial institutions, Miss Jane Goodland is shaping how markets respond to the climate and social challenges of our time. As Group Head of Sustainability at the London Stock Exchange Group, she brings a clear vision for integrating LSEG across global capital markets with a career that has spanned corporate affairs, investment strategy, and responsible finance. Jane's leadership is driving, frankly, meaningful impact at scale. Jane, it's wonderful to have you on the Swift Hour. Thank you.
Thank you for having me. I was delighted to be here.
So I was thinking a bit about our conversation the other day and thinking about the movement overall of sustainability. Where are we today on that movement, would you say? And how might you rate the progress that we have made on this over the last few decades?
Well, you're right to say it's the last few decades, because I think lots of people think that this is kind of sustainable finance and sustainability is something quite new. But actually, the roots of sustainable finance go back a very, very long way, hundreds of years, in fact. But I think in kind of newer times, we've definitely seen kind of wider spread adoption of sustainability by corporates and by government organisations and, of course, the financial sector themselves. And, you know, we look at sustainable finance as being this kind of big mainstream activity now. And that has been a kind of more recent type of development. So I think if you look at the roots of sustainable investment, I've been in this sector since the late 90s. And that was really when we started to see the emergence of kind of mutual funds, which were back then called socially responsible investment funds quite often. And then we've seen an evolution of that, where we've really seen kind of bigger mainstream institutional investors integrating sustainability in a more systematic way into their investment portfolios. So I think we're definitely at this kind of space where it feels far more mainstream. And in fact, we do an annual asset owner survey, and just last year we found 86% of the large asset owners were integrating sustainability as part and parcel of their investment strategy. That feels like a pretty mainstream activity now, that kind of a very large majority of those very large asset owners are just doing this as part of their investment decision making. So that's on the investment side. But corporates, I think, are also have very much matured their approach with respect to sustainability, which I think reflects perhaps some of the maturing regulatory frameworks we now have around sustainability. So sustainability historically was something which was very voluntary driven, often either responding to consumer preferences or employee preferences, for example, or about kind of corporate positioning. But now we see far more regulation around the topic, particularly around disclosure and corporate reporting.
You talk about, did you say 85%, 86%?
86%.
86%. Are they doing this because it's good for the bottom line? Are they doing this because these asset owners, because they feel they owe it to society, to the world?
Obviously, I can't speak on behalf of all of the asset owners, but I think it's fair to say that these are investors with very long time horizons. And I think that sets the tone for why sustainability issues are important to many of these asset owners. You know, these organisations are looking to pay pension funds often decades in advance. So they really do need to think about their portfolio from a long-term perspective. So looking at the types of issues which are going to affect their portfolio now, in the medium term and the long term. Mm-hmm. And therefore, they really need to stretch out their investment horizons. The other element is around these very large asset owners often are what we call universal investors, because they own so much of the market. Just because of the virtue of their size, they end up being very exposed to kind of the broad market in totality. And therefore, they have a vested interest in how the market behaves and how it operates in terms of a well-functioning market. So they start from the position of needing to understand the impact of sustainability risk and opportunity on their portfolios long term. And increasingly what we're seeing is that that's not just a case of thinking within the public equity space, but this is across all asset types. And there's a bunch of reasons for that. For example, when we start seeing the impacts, the very real world impacts of climate change manifesting, we can see that actually the costs associated with climate risk and perhaps the failure to sufficiently adapt is actually costing a lot of money. So just last year in the US, the costs of physical climate-related weather events was $182 billion, right? So this is kind of a big bill. And so therefore, I think financial institutions and corporations are starting to take more seriously the consequences, the financial consequences of not adequately preparing for sustainability related themes such as climate, but also looking at the opportunities that exist, because we're seeing kind of huge kind of growth in new parts of the market that are really gearing up to respond to some of the challenges that the world faces.
So what do you say when if you're sitting here today with the CEO of a large company in whichever sector you would advise, what's your first step of integration of proper ESG practices if they came to you and said, Jane, we haven't done what we need to do. Where do we start?
Well, I think the first place, and any sort of board should be asking, I think, the kind of the management team of, show me what your business strategy looks like in 10 years' time, right? And how important, what's the relative importance of sustainability issues to the success of that business strategy? So it all comes down to how the company plans to make money and create value for its investors over the medium to long term. And then I think it's a case of looking at, okay, what are the sustainability related risks and opportunities which could either contribute to that strategy or detract from it. So that's got to be where it starts.
How do you track, though, instances where maybe the ESG commitments are more talking points than actually action?
Well, of course, we've seen that, right? We know that organisations see the potential benefit of kind of dialing up their ESG credentials. I think what I would say is that I think that we are in a time now where stakeholders just generally are becoming more aware of those examples, and I think are asking more of organisations. They're challenging organisations more, whether that's from a kind of consumer preference perspective, or whether it's investors challenging companies, or whether it's lenders actually kind of really sort of trying to dig through the rhetoric or the claims to work out, actually, well, does this company actually have a credible climate transition plan? Show me the evidence. Help me understand how the company is going to navigate kind of the coming decades and the climate risk that they face. So I think that there's greater scrutiny now of companies, and that should be welcomed, because actually, this is not really about marketing claims. This is not about kind of just managing reputation. It should be about managing real business risk and real business opportunity.
What do you say to those investing in the market? Let's call it, I don't know how you would define them, but your everyday British investor who are following what you are doing. What should they be looking for in the companies that they invest in? And as an extension of that question, do you try to have a general standard for those companies listed on the London Stock Exchange?
So that's a very big question that you've just asked, and probably there's about 4 questions in that. But if we start from, what a kind of a regular retail investor should be looking for, well, I think that it's number one, most retail investors rely on investment managers to do the job for them. So that's something that they could start with in terms of looking at who are they getting to manage their money and their portfolios, and what's those investment managers saying about kind of sustainability related topics. And of course, there's lots of information available. They just need to sort of dig around and ask for it. I think it's absolutely right and fair that investors should be asking their investment managers about what their approach is and their policy, and what information can be shared. The other area, which is quite an interesting route that perhaps people don't explore as much, is their pension provider. So oftentimes you have an employee and they're part of a company's pension scheme, and that's where actually a lot of people, a lot of individuals have a lot of their investment assets tied up in. And that can be a really fruitful conversation as well, because if you're talking to your own corporate pension scheme advisor, then there should be that that opportunity to ask the questions about how that kind of pension provider is taking those factors into account. So there are ways, but it's really about asking the question and taking a view on what you hear back. And I think it's fair to say that investment is an individual activity. Your risk appetite is going to be different from the person next to you. Your preferences around asset classes, investing in different regions is going to be different. So I think it's important to come to your own conclusions about what matters to you. And some investors will take that to the extent of saying, well, actually, I want to invest in funds which are labelled sustainable or labelled responsible, whilst others may not have that same preference. And then there's a bunch of shades in between.
How does politics affect what you do?
A lot, I'd say. I think the geopolitical context is something that we're always really mindful of. And the reason why is it doesn't change the underlying kind of facts of the sustainability issues that we are trying to grapple with. Geopolitics doesn't kind of change climate change. What it does is it heavily influences the policy response to those issues. And so that's why we're interested in geopolitics. And I think what we're seeing at the moment is a really interesting situation where the policies surrounding sustainability issues, notably climate, for example, are becoming far more greatly intertwined with other policies, such as energy policy, security policy, and you're seeing kind of this shifting sand between multilateralism and then kind of a focus on domestic. And so we're in this really interesting time where we have to understand both the policy environment, but also the shifting geopolitical situation as well. And it affects kind of what we do as sustainability professionals, because it's about how we can influence change, how we can understand what the organisations that we're working within are having to weigh up and kind of consider. So yeah, it matters a lot.
What's the generational shift that you see when you talk to older generations versus younger generations and views on sustainability? Do you see a significant difference in approach and attitudes?
It's funny because I think there is this perception that sustainability is for the younger generation to worry about, and actually, I don't see that so much. Actually, I'm sure there probably are statistics that kind of back that view up, but I come across like people of all ages in what I do, and I don't think it's an age thing. I think it's more a case of people having a greater understanding now than perhaps they ever had in the past about kind of some of the consequences of our decisions and our actions now, and what those consequences are going to feel like. And certainly I think we're starting to see far more real tangible evidence of, say, climate changing, and what that means for people, both here in developed economies and elsewhere around the world. So I just think that people are starting to connect a bit more with it as well. It's just more tangible.
Well, Jane, thank you very, very much for joining the Swift Hour. It's wonderful to be with you, and it's refreshing to see. I think there is this air that the sustainability movement might be in question, but it doesn't sound like that is in any way the case in the business community here.
Well, no, I think that we should absolutely always be challenging the business case for doing what we're doing, because we have to remember that businesses are there principally to create value for shareholders.
And that's a good thing.
And that's exactly what they're there to do. What we would be kind of flagging is that sustainability presents one of the biggest investment opportunities of our time.
Yeah.
It really does. And in fact, one of the things that we do here at the London Stock Exchange Group is to look at what that green economy looks like in terms of size. And so every year we conduct research, we look across the whole economy. And if you're only looking at, say, public equities, we've sized that market. If it was a sector in its own right, if the green economy was a sector in its own right, it would now reach about 7.9 trillion, right? It is very large. And in terms of performance over the last decade, it's only second to the tech sector in terms of performance over that 10-year cycle. So this is, we believe, a big investment opportunity. But there is no sector called green. Right, because actually what we're seeing is solutions popping up across all different sectors. And we've got some great innovations coming through because these businesses, these kind of fantastic organizations and companies are spotting the fact that we need solutions to some of the challenges that we face. And actually the business community is a brilliant innovator, and we're seeing some really good solutions coming up. So I think we should be optimistic that we've got a great investment opportunity here, but not complacent, because of course there are different viewpoints about sustainability, and there are some who hold the view, and that's entirely their prerogative, that sustainability is not something that the business community should be concerned with, or the financial sector should be concerned, and that's absolutely fine. But I think to have that view, what we would be thinking about is actually organisations should be focusing on kind of sustainability to the extent that it affects their risk profile, and also it could be creating opportunities for value creation. So that's really where we'd encourage conversations to focus on, is really about what's the value creation story, where should sort of sensible risk management land on sustainability. And, those are the sorts of conversations that we're seeing between investors and companies. Regulators and regulatory frameworks are focusing on kind of understanding the risk and understanding organisations' response to that risk as well.
Well, thank you very, very much for having us at the London Stock Exchange, or LSEG, right? That's
how you say it. Yeah.
That's how I say it. I want to make sure I get that right. Thank you very, very much for having the Swift Hour, and thank you for hosting Concordia and acknowledging the Concordia Europe Summit, which we've just concluded here in London. So it's a lot happening in this town, and it's been a real honor to be here.
Great. Thanks so much.